What's going on, guys? So back with another live stream here. Make sure to like, comment, subscribe to the YouTube. Trying to do these a few times a week. So currently 9:30 a.m. Pacific Standard Time. What we're looking at here is the triple Q's chart. We are coming off of 2 hours of extended selling. So if you're a day trader or a scalper, presented some very nice opportunities for you to go ahead and take some short scalps. I actually took quite a few trades today, all to the downside. All of them paid off very well. Some of the stocks that I was in was Tesla. I did have a overnight swing long on Amazon. That was my only long. Tesla to the downside, AMD to the downside, Microsoft to the downside, and Apple to the downside. So with that being said, what I'm looking at here is a triple Q's chart currently bouncing off of the 1 hour 100 EMA. The big level that the bulls absolutely need to hold, even though we are coming off of some selling, is that 303.50, 302.50 area, somewhere in, let's just call it $303. If the bulls can kind of hold that area, they got a pretty good shot. So for example, if we kind of take a look at where we are on the daily time frame, this is a triple Q's. So obviously we know we're in a bear market coming off of a very extended amount of selling. And what we're actually looking at here is us testing yesterday's lows as well as testing the 20 SMA. Now, that price currently right now is sitting at, let's see, I want to get the exact price here. The price of the 20 SMA is sitting at 303.75. So currently we are trading at 304.97. Just know that we do have some support on the 5-day moving average that is rising at 302.55. So if we do break that 303 area, we do have potential to kind of come down into the 302.5 area. Okay. So for the bulls case, even though we did have a little bit of a back test, one thing that I kind of do want to point out here is we are coming off of a 1, 2, 3 day rally. This could just be some consolidation. So this week we could be looking at just maybe 2, 3, 4 days worth of consolidation. Tomorrow maybe we put in an inside bar day back to the upside, and then whenever the triple Q's get over that $313 area, that's going to be go time for putting some of that risk on to have going long. Okay, right now we're still looking to day trade, we're still looking for scalps, we're still looking to play the day's trend and kind of go with the momentum. So the last thing that we want to see happen is to lose the 20-day moving average on the close, and even worse, lose the 5-day moving average. If we do, then this short-term rally that we had is probably going to be coming to an end. We came into the upper risk range here, to the upper channel, and then we would be coming back down with probably a price target of around 296 between the end of the week and next week. And obviously the macro flush level is going to be below 296.73. So what I'm going to kind of do here is just kind of monitor the charts. I'll probably be on for an hour. So if anyone has any questions on any particular stocks that we can look at, I am pretty much done trading for the day unless we kind of see something really good set up. But in the meantime, I'm here to kind of look at the charts with you guys. So to kind of look at Amazon's 1, 2, 3, 4 day rally here, anybody who was partaking in this Amazon trade absolutely crushed it. I only caught the very end of this move. I got in yesterday and kind of just sold on that initial push higher this morning. What we would still be looking at on Amazon, obviously we know that once we get into that split, you would expect some profit taking to kind of take place, but still the upper level that we could be looking at is 25.23 if we can hold 2400. So if we can hold 2400 and at least start to base out here, then we could be looking at 25.23. Anything below 2400 is going to be an easy short position, has about 70 points worth of room to the downside that we can kind of focus on there. Tesla, on the other hand, Tesla had a lot of $800 calls coming in for this Friday's expiration this morning, but with the overall selling pressure in the market today, just could not really hold that level. So what we're looking at here, Tesla yesterday closed at their 20-day moving average, kind of quickly lost that, but closed right at it. Today could not break yesterday's highs and is now coming back down to test the 5-day moving average. Guys, if you guys don't really understand technical analysis, definitely feel free to join that Discord down in the description box. A lot of great traders there. Kind of help you understand. There's a reason why stocks kind of stop where they do. There's specific things that we're looking for when it comes to technical analysis and knowing when to trade, when to hold, when to get out. So if we kind of just look at Tesla now, Tesla does have a rising daily support at around $725. So anything in between 758 and 725 is just in the middle of a channel. It's going to be extremely choppy. Not saying that you can't make any money in that process, but you just kind of also have to understand that it's going to be very, very choppy. Tesla really doesn't start breaking out until it gets over 778, 779, and then 787. That would be the really big trade. Over 787 has room into 808, and then obviously anything below 724 on a daily close has room all the way back down to 700. Now the bulls are not going to really want to see 700 be lost, because if 700 is lost, that's going to just kind of continue the downward momentum. Let's take a look at Nvidia and Affirm. So Nvidia currently down $3 on the day. So I had a couple of levels marked out here on Nvidia. One of those levels was going to be yesterday's high. So around that 192 area was going to provide a nice little trade to the long side. 192.20s does have room into this upper channel, which is where a lot of stocks have been having trouble getting into that upper channel here of around 195. So if this week is sort of just a consolidation week where we are going to back test these rising supports like the 5-day moving average, then what we're looking for on the Nvidia to the long side is over 192.20 with a potential to 195, and anything over 195 can take us to 200. So as we come down here on Nvidia, we are testing already one time the 5 as well as the 20-day moving average on the daily time frame. But if Nvidia closes under 180 today, which is still a ways away, and considering how much selling pressure the market has already had today, anything below 181 on a close today definitely has room down. That's not what we're really going to want to see. It wouldn't be the end of the world, but 174 would be our next stop there. If we just kind of look at the hourly time frame, this is going to be a little bit more messy and a little bit more choppy. We're still looking at that 192 break to the upside. Right now we are coming down to the hourly channel level at a 180.83. Below 180.83 has room down to 178. So it depends on what kind of trade you're looking for. You got call options this morning. So what you're really looking for on Nvidia is you absolutely need to see 181, 180, 90 hold. Okay, so this whole level here where you can see we came down and tagged this area, this has to hold. Okay, if we just kind of go back to last week, Thursday, we had 1 day, 2 days, 3 days worth of consolidation, but we had a 2-day run up, we had a 1-day consolidation, and now we're starting to roll over. So as we start to roll over here, what we do not want to see is that $180 level lost. If $180 level is lost, then it's going to definitely change the momentum on the stock. And if the market does want to continue to pull back and backtest, Nvidia could be one of those stocks getting hit from 180 to 178. Now, from the call side, this morning we did shoot off the gates, but it all depends on what exactly that you were looking for. So when I say that, if we kind of look at here, because I'm a day trader and a scalper, right? So what I would have been looking for here on Nvidia is pre-market highs, okay? So if I can kind of notice pre-market highs is sitting at around 187, 188, and then literally as the market opens, we explode through 188. So here's my thought process. Everyone's account size is a little bit different, but something on Nvidia, I normally play 5 to 10 contracts, and the way I play it is if this takes out pre-market highs and if the triple Qs are running, meaning that everything is moving together, everything is, kind of just ripping right off the bell, I just like to try to get in and I like to try to get out. So normally on Nvidia, depending on the premiums price, I like to go 5 to 10 contracts. If I see that the market is wanting to run higher and we take out pre-market highs, I'm going to get in this for a scalp over 188. And then you can see it came all the way to 189. And then we put in a top wick at 190. So we're talking about a $2 move. Always when you're playing options, try to go at the money if your account can afford it. Never go out of the money. So for example, if you're looking to buy calls on Nvidia, I wouldn't try to be buying calls at 190, 192, 195. You're just not going to really make any money there if it does pull back. So you kind of have to think about that. So I don't really know what your strike price is, if this is more so of a swing trade or this was a day trade. If this was a day trade, when we were not able to really start building above that opening range break, for example, here at 6:55 Pacific Standard Time, we kind of quickly wicked over the opening range candle and then we got rejected. So when we started to get rejected and come back, rule of thumb for me is that if we start to lose some of these moving averages, the 5, 10, 20-day moving average, I normally try to exit my position, because at that point in time the position is now going against me. Definitely if we lose the pre-market lows, which was sitting down here at 185, 184.92, I'm definitely probably going to be out of this position 9 times out of 10, just due to the fact that if something does happen very, very aggressively to the downside, you do not want to be caught in that move. So even though we did have one rally bounce here as well as another leg down, and we are currently on a second rally bounce, the only thing that I don't like about it is we've never taken out the opening range highs. So if a stock cannot get back over its moving averages or its opening range highs, the probability of this thing coming all the way back up is very, very slim to none. So just kind of keep that in mind. If you are looking to swing trade this, just before I end talking about NVIDIA, if you are looking to swing trade this, it absolutely needs to hold the 5-day moving average. So pull up the 5 SMA on your chart, put the daily time frame up. If we close below the 5-day moving average, the trade is over to the long side. You just have to, kind of eat it, take your losses as we go. I'm going to quickly do Affirm very, very quickly. Affirm, also another stock that's down 14% on the day. So the same thing with Affirm. We never took out yesterday's highs, and currently we've lost the 5, 10, and 20-day moving average. So something like Affirm is kind of sitting at this middle Bollinger Band here. If Affirm, and let me kind of move this chart so it could be seen a little bit better. Okay, so if Affirm, let me take off this old trend line. If Affirm does close below the 5, 10, and 20-day moving average, in my eyes, this is a short position going into tomorrow. So anything below 23.75 is definitely a short position going into tomorrow. And I would be looking to take profits at around $22.50 as well as $20. Anything below $20 is going to be a macro flush point, with obviously $15 as our support range. Not saying that it's coming down to 15, but just when I kind of analyze the charts and look at what stops that potentially we could make, well, obviously anything below today's lows would tell me that we're going lower, and I would have to look to a previous candle on the daily time frame to kind of see what that potential is. So 22.50 would be the price target I would be targeting on a short position through today's lows. Now, if we're going to stay long on a stock like Affirm, what we would really need to see is this stock to get back over its 5-day moving average of $26.85. Over $26.85 definitely has room back up to the previous day's highs of 31 and even 32 and 32.50. It's also still too early to kind of tell if this is just, a pullback in a rally back to the upside, or the rally's over and now we're going to end up rolling over. So the problem that a lot of traders have is that, a lot of people try to time the bottom and they see us have 1-2 green days, and everyone gets very, very excited and they think that it's time to just start putting on longs and holding them. Now, not saying that the bottom is not in yet. This definitely just could be some consolidation, and then we could completely rip to the upside, but we would still need more data to kind of tell us that. So that's why, as of right now, I'm still not really looking to swing trade anything until, the market kind of proves to us otherwise. Because if we do get rejected, and just looking at Tesla's chart here, if we do get rejected here, and Tesla cannot really get over that $800 level, okay, and we consolidate, the longer we spend under the $800 level, the higher probability Tesla has of losing that short-term moving averages and coming back down. So Tesla, as of now, still has room to 727, and anything under 727, definitely 700. And what we do not want to see is if Tesla was to lose 700, it's got room all the way back down to 600. Now, I'm not saying that that's going to happen, but we also always have to understand where potentially something could be heading, right? We never want to get caught blind, meaning that, we never want to think that just because we had 3 or 4 days worth of upward movement, that we're just going to continue trending up. If you can kind of look at my chart here on all this confusion here, these are all supply zones where Tesla potentially is going to stop, where there's going to be potentially sellers, and if the buyers cannot clean them up, it will get rejected. The big level that we have now currently on Tesla is $808. That's the big granddaddy level, short term, where anything over 808 definitely has room back into the 830s, 860s, and 900. So that would be where I really want to put a lot of risk on Tesla. As soon as we can close over 808, I would look to go long into that next following day. But anything below that just kind of has to be on a scalp mode mentality. And sometimes, yeah, we do miss the bottom. So like, for example, on the triple Qs ETF, maybe the bottom is 280, okay? And a lot of people can kind of sit here and get upset that they didn't start loading down here at 280. But what if you start loading in this zone, and this is the short-term top, and we do end up starting to roll over? So you don't want to get trapped in the price of, 303 to, let's say, 312, to like next week be trading at 287, right? So it really doesn't make any sense to kind of load up now. We still need the charts to kind of give us that more information. And for me, it's, sentiment is based on a couple of moving averages on a daily time frame. So that's going to be the 50-day moving average and the 200-day moving average. Are we over or under the 50-day moving average on the triple Qs? We are under. That's going to be this red line here. Anytime we are below the 50-day moving average is always going to be a more seller biased environment, okay? So any rally that we have to look at it as just a dead cat rally. We have to look at it as maybe we get follow through, but maybe we don't. So if I do get into a trade to the long side, I need to make sure to take those profits because I don't want to get trapped. Now, once we get over the 50-day moving average on the ETF that is related and correlated to the stocks that we're trading. So for example, if you're trading things like Nvidia and AMD and Microsoft and Tesla and Amazon, then the triple Qs ETF is the ticker symbol that you want to be watching, the triple Qs, until we get over that 50-day moving average. We kind of have to just look at everything as a dead cat rally, that could get its rug pulled at any specific time. So, from a macro view here, just looking at the triple Qs, very, very harsh rejection that we're having here. If we kind of go back to the 6th of May, this was also a rejection spot once we lost this channel level. So if you can see this blue line here, when we lost this channel level, we lost it actually a few times. So we tested it on 426. We tried to reclaim it on 427. We did push higher on 428. But then we lost it back on 429. We reclaimed it on 5.2, 5.3, 5.4 before losing it on 5.5. So what is the point that I'm trying to make with this? The point that I'm trying to make is that this channel line was acting as a level of support. It was a battleground between the bulls and the bears trying to reclaim this area. If the bulls would have held this area, pushed higher, closed over the 50-day moving average, then the rally could have started realistically at the beginning of the month, last month, being that we're in a new month now in June. We could have been looking at a different type of situation. But as soon as we lost this channel level, we have not reattempted to test it until now. So normally your first test of a significant area that's been lost is always going to get rejected, okay? So the rally off the bottom will always be the most aggressive. The first test of a resistance or a supply zone will always get rejected. But what we would be looking for going forward is to get over this area here of around 313 and then back test. So as soon as we can close over 313 and back test and successfully hold this time, then that push higher is where we're going to want to get long again. But if we come up here and we get rejected and then we start losing some of these areas of demand, then we would be looking at lower prices ahead. Now, I'm not a bull nor a bear, but if I was just kind of looking at the weekly time frame here from a big macro perspective, this is a weekly time frame where each individual candlestick is going to represent 1 week's worth of price action. Last week we got back over our 5-day moving average. This week we broke above it, however, could not hold it. So as we come into this weekly 5-day moving average, if we do lose 303, we have room all the way back down to 290. Anything below 290 would take us into 276. I don't really care what anyone says. Stocks are going to trade from supply to supply and then demand to demand. So, once we reclaim this level of the 5-day moving average, we are looking at a price target of 320 on the triple Qs. So everything is still going to remain bullish on a dead cat bounce until the triple Qs lose 302.50. Okay, so if we lose 302.50 this week, then now I'm not looking more so at 320, but I'm looking all the way back down here at 290. My bias will change from a buy bull bias to a more bear seller biased. So as of right now, I'm still looking at longs that are going to present themselves for opportunities to day trade and scalp, but I'm not necessarily going to shy away from trying to take that short position if the market is going to show it to us. Now, what I could see happening tomorrow is a nice bounce. I mean, if we hold today's levels of 303, I could see a bounce tomorrow taking us back up to the range, which is going to spell for another choppy day, followed by Friday, to probably finish somewhere in the middle of where we started this week. And then, to be honest, when you kind of look at the whole picture from a whole, you're going to look at from Monday to Friday, we were up, we were down, and then when you really analyze it, we really didn't go anywhere, right? So it's kind of tough, especially in a bear market, because it makes trading a lot more difficult. You need to be a little bit more precise on your entries. You need to be a little bit more, you need to be a little bit more keen to like taking profits, right? Like we don't just want to think because we had, a couple of green days that everything's going back, right? Because maybe it can, maybe it can't. So we just want to make sure we lock in profits when we can. And the stock that I really want to take a look at and watch for the rest of this week is going to be Apple. Apple is very, very heavily weighted in the NASDAQ 100 as well as the SPY. If Apple cannot really hold this 20-day moving average, it could drag the market down as well. This is the first test of the 20-day moving average after breaking it yesterday. So what we really need to see is Apple hold the 148 level. If Apple cannot hold its 148, 146 is the next support on Apple, which from a short-term perspective, I could see Apple coming down to 146. If the market is going to hold, I could see us bouncing from there. Anything below 146 on Apple is basically going to start telling you that the triple Qs, as well as a lot of stocks, are going to start making their way down lower. So, still considering, even though today I was, pretty much 80% short biased on my trades, just due to the fact that how aggressively, and I was telling a lot of people in Discord this morning, I didn't like today's rally just because it was so aggressive the first 5 minutes. Like anytime the market opens and everything just starts moving higher and higher and higher and higher and higher, and we get to be like 15-20 minutes in and nothing has even taken a break and everything is pretty much just going straight up, you kind of almost feel like it's going to stall. And literally at the top of the hour, after the first 30 minutes, everything pretty much hit a ceiling and started to aggressively come down. So like if you're looking at it from a bull standpoint and you are a long bias trader, You almost want to stay patient the first 30 minutes of the market to kind of let everything get itself, out of the system, and then see if the market is really going to be strong. You're not going to miss anything because you didn't take a trade in the first 30 minutes. In fact, you're going to save yourself money because you're not going to FOMO and you're not going to chase into a trade that realistically is probably not worth chasing. Like anyone who bought stocks long after, the first 15 minutes of the day, 20 minutes of the day, you've lost money. Okay. I don't care what you said. Like if you did not sell within the first 30 minutes of the market, probably 8 out of 10 trades have lost money since then. So, if you would have just stayed patient, allowed everything to get its stuff, kind of situated, would be a different story. But it provided great opportunities trading to the downside because everything was so super far extended. We just knew that if we lost, certain levels on a smaller time frame, like for example, if I kind of just look at Apple and I look at the 5 minute time frame, what we can see here, as soon as the bell opens or as soon as the bell rang, not only did we just shoot up higher, 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 we hit 151.74 and then aggressively came back down. So something on Apple that I was looking for is obviously going to be the pre-market lows, which pre-market lows is kind of sitting at 148.47. So I kind of understood that that's going to be an area of interest. But like realistically for me, if we put up this big of a move and then it gives it all back on one candle is never a good sign, right? If you pull back, like there's going to be pullbacks even on these type of moves. There'll be pullbacks, but the pullback should have been here or here, bounced, here, bounced, here, like consolidate, right? You want to see consolidation and then you want to see a break to the top side. You don't want to see a 30-minute rally followed by a 5 minute give back, right? Where we just give everything back in 5 minutes. So for me, this is a pretty easy short position here. As soon as we lost this 20 SMA, I'm going to go ahead and get short. And as long as we don't close above it, I'll continue to hold that position. And when we lost the 20 SMA here, the price was 150.32 and it came all the way down to a low wick of around 148.65. So this is about a $2 move in a matter of 5, 10, 15, 20, 25, 30 minutes, right? So you make $2 on a stock like Apple, especially if you're trading options contracts. They're relatively cheap, between 120 to like $200 depending on how close to in the money you want to get. You take 10 of them for $2,000. You get a 2 point move in your favor, even a dollar move in your favor. You're looking at a couple $100 trade at least within 30 minutes. This is a $200 trade easy within 30 minutes. So what is everyone looking at? Is anyone looking at any particular stocks? Maybe we can go over and see what they look like. A lot of stocks look to be holding, somewhere near yesterday's lows, give or take a few points. So it's going to be a little bit of a consolidation period right now where the market is trying to figure itself out. So, what you kind of look at, it's also New York lunch hour market for me. Between 9:30 realistically and around 11 o'clock, it gets very, very slow. A lot of liquidity and volume dries up during this hour. This is a lot. This is especially the time where a lot of traders can get FOMO because they feel like they're missing out on something, or they're forcing trades, or you're kind of just all over the place. It's kind of always good to kind of sit out, those middle 2 hours of the day as the market tries to figure itself out. As of right now, it kind of looks like we're going to tread sideways until the market wants to decide whether we're going to go higher or lower. Now, if we do go any lower, it's not going to look good for tomorrow. The best possible case for the bulls is to kind of hold these lows that we're currently at and continue to tread sideways, and then maybe have some sort of bounce within that last 1 to 2 hours of the market. We can see here the triple Qs are still holding yesterday's lows, as well as at 20 SMA. This is going to be a very, very big spot here. This 303 area is a huge spot for the bulls on the triple Qs. And the only reason why I look at the triple Qs versus the SPY is because the SPY has 500 companies in that ETF. It's going to have things like financials and oil and energy companies as well. So yeah, it's a good overview of the market. It's a great index to trade if you're solely trading, the SPY ETF. But as far as when I'm kind of tracking stocks, I trade a lot of high beta stocks, which is, your tech stocks predominantly and your mega caps. The triple Qs is going to be your best indicator to kind of use. If we kind of look at the past 2 days here on the triple Qs, going back to Friday when we had the big run up, and then we had a little bit of selling. So if you're a bull, this is what you want to see in the pre-market. You want to see a flat to red open. You want to see a catch of support, which they caught the 1 hour 50-day moving average, and then you want to see another explosion. Okay, so when you look at today's pre-market or after hours yesterday and today's pre-market, it's pretty much flat, but then we started to ramp up in the pre-market, and then as soon as the bell rang, we just exploded. So yes, we exploded, but this was a very, very harsh fake out here, and then an immediate rejection with a violent downturn. So as we come down here, what we do want to see is we need to see these lows hold. The 303.50 must hold, and then 302.56 must hold. Okay, so if anyone is looking to maybe bounce a stock with low risk, again, low risk because you're going to give yourself not a lot of movement, would be trying to bounce somewhere in this area of 303s, right? Somewhere between 303 and 304, you would be looking to try to bounce long, because if we are going to rally back to the upside, we do have room to go back to the upside. And the reason why it's a low risk is because if we do lose the 303.50, we know that that trade is over and that momentum is done, and we quickly exit our trade. Now, it's risky because we are coming off of 3 hours of selling. But what I do see here is this hourly candle is a little bit of an indecision candle. The volume has dried up, and this is normally telling me that we could be looking at a short-term reversal. Not saying that, we're going to continue to ride higher the rest of the week, but a short-term reversal. So if and when the triple Qs can get back over 305.50, we do have room back up to 307. So this would present a nice trade to the long side. But again, it's a trade, it's a day trade, it's a scalp. It's not, we're going to get in at 305 because we're coming all the way back to 313. Now it could do that, but that's not the way that we want to think. We want to think short term, because the market, is very, very volatile. And if anyone doesn't have any more questions on any particular stocks, I'm probably going to end here, as there's not a whole lot going on.